Hi guys, welcome to a simpler approach. If you are new to the channel, don't hesitate to subscribe, like, comment, and share. Today, we will be looking at a topic that, in my experience, is somewhat a dreaded topic. But today we will be simplifying it, okay? We will make it a whole lot clearer and we will see that this topic looks like a dragon, but it's actually a butterfly. All right. We're talking about the manufacturing account. Let's dive into it. In our study today, we will be looking at the manufacturing account, its concept as a whole, and we will also be looking into direct and indirect costs. And that process is very critical to understanding the manufacturing account in its entirety. So let's get started. The manufacturing account stems from the situation where a firm produces their own stock. They make their own goods. Typical businesses buy and sell, supermarket, wholesale, retail. Buy the flour, package it, resell it. But there are companies that make their own stuff. Factories that make their own clothing and then sell it. Companies that make their shoes and sell it. They don't buy sneakers, put a markup on it and sell it back. They make their own stuff. Now, as a result of that process, they have to calculate the manufacturing account, which ultimately shows the production cost of making the goods. In other words, the manufacturing account calculates how much did it cost me to make the goods that I did. Now, the process of understanding the manufacturing account lies in three simple things: prime cost, production cost, and total cost. Now, if you understand the intricacies of these three things, then the manufacturing account, and by extension, the income statement that comes with it, will not be an issue for you. In this lesson, we're going to take on these three things, starting with number one, prime cost. Now, prime cost is made up of three things: direct materials, direct labor, and direct expense. Now, if you look at that description, you will recognize a key word in all three: direct. Therefore, what does direct mean in this context? Now, in order to determine if an expense, if a cost is direct or indirect, all we simply do is trace the cost to the item being manufactured. If it is directed at the item, it is deemed as direct. If it cannot be traced to the item, if it is far off or in another hemisphere, then it is considered indirect. There is a, how should I call this now? I'm trying to remember the name of the business. If I can't remember the name, Smoothie, that's the name. There is a smoothie shop that I love to visit. I'm going to use the smoothie shop as my example to bring out the aspect of direct and indirect cost. As you should know, smoothie is a blended drink, okay? Now, the drink is blended and sold. It is not bought somewhere and then sold back at a profit. The raw materials are bought, it is blended on site and then sold. So the blended beverage would be the business's stock or inventory, as it were, okay, that they sell to make money. All right, follow me now. Now, in order to make smoothie, you need fruits, don't it? Therefore, the fruits that are used to blend the beverage is called direct materials. You need those things in order to make the beverage. Okay? Direct labor would be the wage or salary that is paid to the person who actually does the blending. Case in point, that faceless gentleman right there in the white shirt blending something that appears to be June plum or American apple? Yeah. His wage or salary would be considered direct labor. Now you may ask, what about the janitor who cleans up the shop and ensure the shop is looking fresh and nice? The janitor would not be direct labor because the janitor's function is not directly linked to the smoothie being prepared. Okay? Only the person making the smoothie would be considered as direct labor. Now, direct expense would be an expense that is directly linked to the smoothie. Now, let's say one of the smoothies that is being sold is a recipe that is patented and owned by somebody. Now, the owner of the smoothie shop obtained the recipe from the owner and used it to make money. Now, when you obtain someone's intellectual property, you pay something that is called royalties. Now, the paying of royalties is a direct expense because it is directly linked to the item. Without the recipe, the item can't be made. Okay? So this brings out the concept of direct and indirect cost. If it is directly traced to the item being manufactured, then it is a direct cost. If it cannot be traced directly to the item, then it is called an indirect cost. Having explained direct materials, direct labor, and direct expenses, that takes care of number one, which is prime cost. Number two is called the production cost. And the production cost is made up of prime cost, which is number one, and indirect manufacturing costs, otherwise known as factory overheads, which is basically all the indirect costs that are associated with the entire production process. Okay? For example, the janitor's wages, depreciation of factory equipment, factory lighting or power, or factory utilities, those are indirect manufacturing costs that are critical to the entire process, but they cannot be directly linked to the item that is being manufactured. That's number two. And number three is total cost, which is made up of production cost, which is number two, and all administrative and selling and distribution expenses. Okay? Hope you're following me carefully. We're now going to look at the outline of the manufacturing account and bring all of this into perspective. The manufacturing account, along with the income statement, can be very lengthy. So what I've done in order for you to see it clearly, I've broken it in two. All right? So follow me carefully. Now, go back to number one. Number one is what? Prime cost, which is made up of what? Direct material, direct labor, and direct expenses. All right. This is the first half, the top part of the manufacturing account. Now, we start with opening stock of raw materials. Then we add purchases of raw materials, add carriage inwards of raw materials. After we've added all those together, we subtract returns outwards of raw materials. That's if we, had to send back some of the raw materials that we bought for whatever reason. Okay? We subtract that, and then from the balance we get, we subtract what is called goods drawings. And goods drawings would be a situation where if the owner had taken out some of the raw materials for himself. In the smoothie shop, the owner probably ate an apple, ate a banana, ate two of the cherries that is used to make the cherry smoothie, something like that. If anything like that took place, then the value of that would have been subtracted. All right? And then you would ultimately get this value right here. I know there are X's for now, but there's an outline, so follow me carefully. All right? You would get this figure right here. From this, you would subtract closing stock of raw materials. Okay? That's the raw materials left at the end of the accounting period that was not used. After you take the closing stock from this net raw materials, so that's in use or that's available for use. After you take that, you would get direct materials, the cost of direct materials. Now remember that that's the first thing in the process of calculating prime cost, which is number one. Now, because of direct material, what it is and its sequence, in order to get to here, cost of direct materials, you have all of this to deal with. Okay? The opening stock of raw materials, add any raw material that was purchased, add carriage inwards, if any. Then from that total, you subtract returns outwards, if any. And then from that total again, you subtract goods drawings, if any. Then when you have done all of that, you subtract closing stock of raw materials, which represents the raw materials left at the end of the period that was not used. Having done all of that, you would have calculated direct material. How much did it cost me to acquire direct materials? To that, you would add direct labor. That's the wage or salary of the person or persons that are directly related to manufacturing the item. So in my smoothie example, it would be the young man or the young lady or the two persons that are doing the actual blending and making of the smoothie. Okay? And then to that, you would add any direct expense. When you have added these three together, you would have calculated the first step in the process, which is the prime cost. After calculating our prime cost, we then head on to adding to prime cost all factory overhead expenses. And these are almost all the examples you can find. factory lighting, factory heating, factory insurance, factory rent, factory maintenance, factory indirect wages, or just indirect wages would suffice, supervisors' wages, depreciation of plant and machinery, and all other fixed assets related to the factory. Okay? You add all of that together, add it to prime cost, and then you get this figure right here. Okay? Then you take care of something that is called work in progress. Work in progress is goods that are partially completed. So the process of converting it from raw materials to finished goods, that process started but was not completed. That is added to this figure right here. Okay? Which gives you this figure right here. Then we subtract the closing stock of work in progress. Now, if you are wondering what's the difference between opening work in progress and closing work in progress, opening work in progress are those semi-finished goods that we had at the beginning of the accounting period. Those are the work in progress that we will have finished first before we started anything new. Okay? Now, if that's the case for opening, then naturally, closing work in progress would be the unfinished goods, semi-finished goods that we had at the end of the accounting period. So we would add the opening because we're going to finish it first, but then we would subtract the closing because they aren't finished yet, so they cannot be counted. Okay? Because remember, we're ultimately calculating the production cost of goods completed. And those are semi-finished goods, which means they are not completed. Okay? Now, after you would have done all of that arithmetic calculation, you would ultimately come to what we call cost of production carried forward. Or in other words, the cost of producing the goods that we produced. If you are looking in any other book that might call it production cost of goods completed, that would be perfectly fine. Okay? Let us use the following example to bring into perspective all that we've been talking about. And by extension, turn those X's into figures. Okay? I'm going to give you a minute or two to look at this trial balance of Johnson's Manufacturing and assess it before we use the information to create a manufacturing account. Additionally, we are usually given notes, additional information to what we see right here that is critical to the process of preparing the manufacturing account. In this case, we have the following notes. Stock information, closing stock of raw material, $36.70. Closing stock of finished goods, $2,900. Closing stock of work in progress, $800. Wages are to be apportioned or shared. Direct, 60%. Indirect, 40%. Fuel and power, rent, and lighting are to be shared 70% for the factory and 30% for administrative purposes. And number 4, depreciate productive equipment at 10% and office computers at 5%. These things you're going to need to know as you begin the process of preparing the manufacturing account. When the manufacturing account has been prepared, it will look something like this. Let's break this down, shall we? Opening stock of raw materials 2,400. Then we add our purchases and our carriage inwards. Add all of that together, we get 45,350. Now bear in mind that there were two other things in the outline: returns outwards and goods drawings. Now those two things are not in this example. And notice you don't see them here any at all. That's because you don't write the missing item and then put 0, calculate and move on. No. No, 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 no. If the item is not there, you skip it altogether and proceed to the next item in the sequence, which in this case would be closing stock of raw materials. Okay? Subtract the closing stock of raw materials and we get our cost for direct materials, which is 41,680. Then we have direct labor, which is 27,000, and direct expense, which is 1,300. Let me pause for a second to remind you that the footnote said that wages are to be shared 60-40. Now, wages is the remuneration paid for labor. So wages is pretty much labor, so to speak. So 60% of the figure is direct, which amounted to 27,000, and the rest is indirect, which is 18,000. Okay? Add direct material, direct labor, and direct expense, and you get a prime cost of 69,980. Okay? Then to prime cost, you add all factory overheads: wages, fuel and power, rent, insurance of factory equipment, general factory expenses, and depreciation. And remember, you would use the information in the footnote to aid your calculation. Okay? For example, the footnote number 3 said fuel and power, rent and lighting are to be shared, 70% factory and 30% admin. So whatever fuel and power is, 70% of it is for the factory and 30% is for admin. And the same principle applies to rent and lighting. So when you have placed the figures in their place, add everything together and you would get this figure right here, 35,562. You add this figure, 35,562, to your prime cost, which gives you 105,542. Add your work in progress, which represents the semi-finished goods that were in stock when the accounting period started. Those are the goods that would have been finished first. You know, they're semi-finished. So finish them first before we go to anything else. Okay? Add that to 105,542. Then you would get 106,992. Then you subtract the closing work in progress. Why? It cannot be accounted for in this case. It's semi-finished goods. We are calculating the cost of finished goods. Therefore, it has to be subtracted. When the subtraction has taken place, you would be left with 106,192. This, my friends, is the manufacturing account. And the manufacturing account is primarily done to calculate the cost of production, which in this case is 106,192. Having completed the manufacturing account, then comes the income statement. Why? Because you have calculated what it costs to make the goods that I made. I have now sold them, so I need to know how much profit I've made. Sounds fair, doesn't it? Sure it is. Now, the income statement, as you know it, remains the same, the concept and everything. There are only two very slight changes. Number one, replace purchases with cost of production. Why? Remember that purchases represents, well, with the income statement as you know it, purchases represents the value of goods that are bought in order to be sold at a profit. But in this case, we did not buy any goods to sell back. We made our goods. That is why we replace purchases with cost of production. That's the first thing. The second thing, in the profit and loss account, we are used to just writing down the expenses, just put them there. But for manufacturing, the expenses are grouped together in two categories: administrative expenses and the selling and distribution expenses. Apart from those two slight changes, the entire concept as you know it remains the same. And this is the evidence of that. The income statement as you know it. Only two slight changes. This one, taken from the manufacturing account. As you know, the income statement, purchases would have been there, but we changed purchases to cost of production. Why? Let me tell you again. Purchases represents goods that were bought to be resold at a profit. With the manufacturing account, that's not the case. Goods are made, they are produced. So instead of purchases, you have the cost of production. And the other change would be the expenses that are grouped. You are used to just putting them there, but in this case, they are grouped. Everything else remains the same. So that takes care of the income statement. For the statement of financial position, this statement also remains the same. The concept as you know it remains the same. There is just one slight little change. Itty bitty change. And that'll be that. There are now three types of stock. So you're used to just putting down stock, one single figure. But with the manufacturing account, there are three different kinds of stock. You have stock of raw materials, you have stock of finished goods, and you have work in progress stock. So you'd have to list all three. Apart from that, everything for the statement of financial position, aka balance sheet, remains the same. That's it for our lesson today. I hope the information was clear. I hope the content was precise. And I hope you learned something. As usual, if there are any comments, concerns, questions, feel free to ask them in the comments section below, and I will respond to them directly. Until next time, walk good, stay safe.